Good morning, trader. This video is focusing on the dollar-yen breakout, but of course also in today's review of the market, the euro dollar, pound dollar, dollar-yen, AUDUSD, brought to you by Admiral Marcus. First of all, though, be aware that this video is shown to a global audience, yet may not be suitable for everyone. Take a look at admiralmarcusglobal.com, select your country of residence, and contact an appropriate entity for more information on that. Also, please be aware that trading for exchange of global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only. And by continuing watching this video, you agree with this disclaimer and you are aware of the risks involved when trading. Okay, today I want to start with the pound USD daily chart, and we had an interesting break, of course, of this support trend line, basically perhaps even a neckline if you consider that to be a head and shoulders right here, these red circles indicating a reversal pattern. So we got a break there, but we're having a bit of hesitation with a follow through. If we zoom in just a tad, you can see that this is a substantial wick on the bottom of that candle, and that we also had a bullish candle on Friday. So we're seeing a bit of a bounce at these support levels around here. Not a direct bounce, but a bit of a pause at the least. So if we put trend lines basically connecting the tops and the bottoms, we're seeing a bit of a channel to the downside, and we're quite close to the bottom of that channel. So if price breaks that channel, we might see an acceleration of the downtrend. Price would have to break below, let's take a look, 140-ish basically, to get that continuation to retest this bottom at 138.30. And once that bottom breaks, of course, there could be a bigger downtrend continuation. We do have a lot of momentum here, and that could easily happen, of course, with a downtrend continuation. Now, if price does not break through that bottom and not below that channel, then at this moment, we're kind of building a little bit of a triangle here right at the bottom of that channel. So if price uses this support to make a bigger rally, price would have to break above this triangle, and there's space to, for instance, the 38.2 fib, but even maybe higher fibs like the 50 or the 61.8, and perhaps retest that broken neckline that we spoke at the very beginning. So that could happen. That's a bullish scenario basically, whereas this is the bearish scenario. If price does make a bullish break, as I said, I am expecting then these levels to be potential resistance spots, and if price gets there, perhaps even up to here, there is a confluence then with the trend line, of course, at the top of that channel. And that purple line basically is the channel line that I just talked about right here, but the resistance one, right? So those are the two scenarios: break here or a bounce here. But then if it does bounce, there's of course a good chance that price might respect this resistance, this downtrend channel, and then make a bearish turn. In the meantime, we're having a bit of a channel, or a triangle basically right at the bottom of the channel, and that itself is a chart pattern on its own, and taking a look and keeping an eye on those trend lines for an upside or downside break. And before I take a look at the other three currency pairs, take a look at admiralmarcus.com. There is a potential throughout April and May to get up to 50% deposit bonus. Just click on the Get Your Bonus button and find out all the details. I'm sure you'll find that interesting. Take a look at the website. Other than that, we got webinars, of course, again this week, Monday, Tuesday, Wednesday. We have the usual trading labs on Tuesday, Wednesday, trading room webinars. And on the Monday, Tuesday, Wednesday evening, we have also webinars. Monday, Nana takes a look at his setups. And Tuesday, Wednesday, we have education. Tuesday, advanced methods with trend lines. And Wednesday, Nana will discuss how he trades deposit bonuses. All right, next one on the list is the euro dollar 4-hour chart. And I'm not a very big fan of this. I am bullish on the euro dollar, but I'm not a fan of trading it just because it's so close to resistance. We have a purple trend line coming in connecting these stops, but there's also an important daily resistance level at 114.75, 115, plus a psychological round level. So there's a lot of resistance there, and I think that that could be a bit tricky, and I'm not too enthused about trading right here. Now, there is also a pretty interesting and strong support level indicated by that green box, and price has been using that frequently over the last week or so, and using it, basically the market is buying those dips and price is not moving lower. So I think we're getting a bit of support here. There's a bit of a sideways zone, but definitely I think that the support is dominating at the moment. But then again, there is strong resistance here too. So it's kind of caught in between those levels. And I don't see very much a trade right now. A potential long somewhere in here perhaps could have been interesting, but we're talking about the past anyhow, just to buy those dips at support. But right now it's about halfway. I do expect, as I said last week and during the live webinars last week, that basically price is making your trades from your upside. So that seems to be indeed true, that price is indeed moving up. So, that is fine. But at the moment, it's just right at resistance. And I think that from this time frame point of view, it doesn't look that interesting. From a daily, basically, you can see a lot of wicks on both sides. And I think that a short potential, reversal potential 115 could be an interesting idea for me to keep an eye on this week. But if it breaks above that, if it goes up to that level, makes a bit of a dip here, right, and then starts to find support again, there could be a break to the next resistance level at 117. So I think that for this week, a reversal trade at 115, but then a potential continuation up to 117 could be very interesting. If price does break below this 112.50 zone, 113.50, 113, then of course there could be a bigger reversal going on. And otherwise, the target could be, after 115, could be 117. Now for the next couple of hours or so, if it does still make one more dip maybe here, it could be the same scenario, using these bottoms for a bounce. Could still be interesting for myself, so I'll keep an eye on that. But I'm not a very big fan of the euro dollar. Dollar yen seems more interesting. We got a break, of course, a very strong break. In fact, the weekly candle here looking pretty sizable, pretty good size, but also the close is near low. So this candle very dominating the chart, and also it's a breakout candle. It's breaking through that support level we had for a couple of weeks. So the clear break of that level throughout that last week. We talked about the trades I took in the live webinars on Tuesday, Wednesday as well. So I think just putting a fib on that candle, I think is my strategy for this week. A bit of retracement of that last week's candle should see a follow through for one more downside, at least I would say. I don't expect the currency to reverse and break last week's high, considering the strength of that candle, basically very dominating. I wouldn't expect that. So a retracement up to the 50 fib, 109.70, or even the 38.2 fib at 109.25. That's what I'd be looking for this week. And if I zoom into the 4-hour chart, you can see the red zone here as well. That is the broken bottom, obviously. Certainly would not expect price to go above that. So anywhere around these fibs, basically, these 3 fibs, would be a great pullback, right, for more downside. So I'll be looking for entries in that zone. Now, price might not get there. I mean, we might just get an immediate follow through. Price is now right at the previous bottom. So it's difficult to tell. Will it use it as a bounce, or will it right away break? And that's really something we have to find out, maybe on a lower time frame at best. At this moment, it's difficult to say. If it does get up there, though, I would be interested in shorting. That's what I do know. If it doesn't get there throughout this week, if it falls and hits the minus 272 target, for instance, there could be divergence. In that case, I would be a bit cautious. I'm not saying that I would rule out all shorts, but I would like to see basically a bear flag and then the break of the bear flag before trading it. All right, just because of the divergence, the price might retrace deeper than I expect. So if it does break and go, right, then I'm going to be cautious. I want to see some triangles or some chart patterns. If it does break and go and we get a good hourly candle that is breaking below this midi bottom right here, then I might look today or tomorrow for a bit of a continuation down to the 106.50 at the minus 272 target. All right, next on the list is the AUDUSD. Good uptrend. Put the fib on the daily swing high, swing low. Price respects the 38.2 fib. So I'm expecting a due to the momentum here and the bullish break that we already had, I am expecting so far at this moment a continuation at the 38 or the 50 fib. If it breaks below the 50 fib, that bullish scenario and trend I think is definitely off the table, and I'm becoming neutral, becoming more cautious of this Aussie, what it could do in the near future. For the moment, I'm bullish as long as it stays above the 50, and I think that the 38 and the 50 fib could be bouncing spots. So gonna keep an eye on those levels. Now, besides the bounce at those fibs, I think that there could be a breakout scenario too above this resistance trend line, and there could be a continuation if it does, and the target could be all the way up at 79 if it breaks above resistance, trend line, and the top, of course, as well, for a potential move to the minus 27.2 target. All right, well, thanks so much for joining. Hope to see you in the live webinars, and wish you all great trading. Cheers.